Hi there and welcome to Crypto Arcade, and in this video we are going to talk about the MACD. The MACD stands for Moving Average Convergence Divergence, and when you go to add the MACD indicator to your charts, you can just type in MACD and it will apply a window to the bottom of your chart that looks something like this. Now we're going to go through what each of these lines represent and the histogram, and how to read the various trends and signals from this. MACD is a very versatile product. It's one of these indicators that you can add to your chart and determine a lot of different signals from. So now that we've got it added to our charts, let's go through what each of the lines represent. Now, actually, when you add it to your charts, it's okay to add it under the standard 12-26-9. So let me open this up real quick. All right, so the inputs for the MACD, you've got a fast length, so 12, 26, and 9 are your standard input values. Now, you'll notice here on TradingView, this is the charting package that I'm using, they offer the opportunity to use SMA, but the standard, the way that MACD was created, was using the exponential moving average, the EMA. So if you remember that from the previous video, we talked about moving averages and the difference between a simple moving average and an exponential moving average. So bear in mind that MACD, the standard use of MACD is using exponential moving averages. So basically we've got maybe four things that are included within a MACD oscillator at the bottom of the chart. So we've got this blue line, which is the MACD line. We've got the orange line, which is the signal line. And then you've got this histogram. This histogram is basically the difference between the blue line and the orange line. So you'll notice right here, the blue line is above the orange line, and so therefore the histogram is above 0. And when the blue line falls below the orange line, you'll notice that the histogram falls below 0. So the histogram is simply the difference between the two lines. Now the 0 line is this line that moves right through the center of it all, and that is important as well. We can use that for a couple of different things. So let me mark it. Let me change that here real quick. Okay, so there we go. There's the 0 line. All right, so now to unpack this, what these lines actually represent, what are their calculations doing, I'm going to slim down this MACD here. Let me get rid of the histogram. So I'm going to turn off the orange line, and I'm going to turn off the histogram. So basically we just have the blue line showing right now. Now the blue line is basically the difference between the 12 and the 26 EMA. So if I come up here and if I add the 12 EMA and the 26 EMA, now I probably did this wrong. I have another blue and orange line here, but they represent different things. So on this chart, on the price chart above, I've got the exponential moving average. The 12 EMA is the orange line. The 26 EMA is the blue line. Now, the difference between the 12 and the 26 EMA is what this blue line in the MACD represents. Okay, so for example, you'll notice that, let me find a good spot. Okay, so let's take it from here to here, okay? Now, what I want you to notice is that on the black line to the left, the vertical line, when the fast moving average, the orange one, crosses down below the blue moving average, so we have a moving average crossover, notice that coincides with when this blue line crosses the 0 line. So basically, when this blue MACD line crosses the 0 line, that's telling you you're getting a moving average crossover between the 12 and the 26 EMA. And then off here to the right, notice that the orange line crosses back above the blue moving average, and that means that the MACD line is crossing above 0. So the first important thing to remember is that the MACD line, the blue MACD line, represents the difference between the 12 and the 26 EMA. And so if you just add the 12 and the 26 EMA to your chart, you'll be able to see that as they oscillate up and down, crossing over, it generates this MACD line at the bottom of your chart. So let me add back the signal line. Okay. So now we've got the blue line represents the difference between the 12 and the 26 EMA. And then the signal line represents a 9-period moving average of this blue line. And so it's a signal line in that when the blue line crosses down below, the orange line, then that's a signal to sell. When the blue line crosses above the orange signal line, well, that's a signal to buy. And so that's why it's called the signal line. When the blue line crosses the signal line, that gives you the signal of whether you're going to buy or sell. Okay, and then if we add back the histogram is simply the difference between the blue and the orange line of the MACD oscillator. So for example, notice here how the histogram is very large red, and that's because the difference between the blue MACD line and the orange signal line is very large. But then notice, as that difference starts to squeeze together, and as the blue and the orange lines start to cross, notice that the histogram gets very close to 0 and crosses 0. So there are the various components of the MACD. Now, how do we use this to generate trading ideas and trading signals? And there are a lot of different ways to do it. So first of all, we can look to the MACD to help us determine the direction of the trend. And one way that we could look at that is if we strip out some of the things that I had shared earlier, and if we just leave, the MACD line out here, and whenever the MACD line is above 0, we could say that the trend is up, and now we're going to look to buy. And when the MACD line is below 0, then we will look to sell. So under this situation, this would be a buy signal right here. And then this would be a sell signal. Okay, so there would not have been much profit made on that buy signal, but this would have been a sell signal. And then this would have been another buy signal here. And this is the downside to the MACDs. When you get a sideways range like this, the signals are not going to tend to be very strong. But if we push forward here to the right, notice that we moved up above 0 and that we stayed up above there for quite some time. So this would have ended up being a very nice signal here, a buy signal around that 43,000 range, and then it would have been a sell signal around 60,000. So using it as a trend indicator is one way of using MACD. Also, we can use it as just straight buy and sell signals too. Let me get rid of the histogram. And by looking at the MACD line and the signal line. So, for example, whenever you get the MACD line crossing above the signal line, right here, MACD crosses up above the signal line, that would be a buy signal. Whenever the MACD line crosses down below the signal line, that would be a sell signal. So this would be buy, this would be sell, And then this would be your next buy signal. And then this would be your next sell signal. Obviously, when you're using the MACD and the signal line, the signals come in a bit more frequently. And so you have to be mindful of that you're, these are just calculations, just math equations, and that sometimes you will experience false signals. A lot of times you'll experience false signals because it's just simply an algorithm. Now, the histogram, there's a couple of different things that we can pick up signal-wise off of the histogram. And one of those things is what we would call divergence. So divergence is when we get a lower low on price, but a higher low on the histogram. So let me get the MACD line and the signal line out of here. So now we're just looking at the histogram. And so if we focus in on the price action right here, notice that as price has come down and we've experienced a lower low right here, but yet we have a higher low on the histogram. Okay. So a lower low on price, a higher low on the histogram, that is bullish divergence. So that tells us that a bull rally is about to take place. And by the same token, we can flip that around, and when we have a higher high on price, so we have a high, and then we have a higher high on price, but we have a lower high on the histogram. This is also indicative that the market may be turning lower. So we can use that as a potential sell signal. So that's a way that you could use the histogram is for divergences. You can also use or look for divergences between the MACD line and the signal line. So let's see here. Yeah, here's a good example of well, maybe not a good example, but you've got a higher high on price, and then you've got a slightly lower high on the MACD line. So that is divergence. So that tells you that the market is about ready to turn. Okay, so that's all we've got for this video on the MACD. A very versatile tool that you can use to go out and identify trends, identify trading signals, when to buy, when to sell. And hope that you found this video helpful. We're going to move next into the Relative Strength Index, the RSI, and talk about it and how to identify trading signals using it. We'll see you in the next video.